Hey there everybody, in today's video I'm going to tell you how you can make up to 50% return in quarter one of 2022. I'm going to go over the top stocks to be buying in January 2022, top stocks to be buying in February 2022, and top stocks to be buying in March 2022. If you guys enjoyed this video, please hit that like button, subscribe if you're new, and share with your friends and family so we can be able to take advantage of what is happening in the market right now so we can be able to make up to 50% return here moving forward in the first quarter of 2022. So let's jump into it. We've been seeing that there is increased tensions between Russia and the United States with the whole Ukraine thing that is going on. And we know as investors we could take advantage of this. So we look into how the United States and Russia tensions are going. We can see that Russia is actually one of the main suppliers of natural gas to Western Europe. This is a big deal because of tensions between the United States and Russia continue to rise. We know that the Western Europe is going to need natural gas to be able to be heated for winter here moving forward. So that is a big indicator to us as investors that we could be able to make some money off of what is going on between Russia and the United States tensions. We saw that there is no progress as of right now between the United States and Russia. The Associated Press reported that, and I will be showing that here. We can also see that there are other things that are going to be increasing oil and natural gas prices. We're going to be looking at the Farmer's Almanac that I'll be displaying here, that this is actually going to be one of the coldest winters, or above average cold winters for the United States. We know that energy prices have risen a lot from 2022 because of the demand increase for it, and they lowered production in 2020 because of everything that was going on and with everything closed down. So we know that this is going to be able to increase, and there's going to be a lot of potential profits to be made. We saw that the federal government actually put out a notice back in October that energy prices were going to be up about 40% from 2020 to 2021. That was factored in, but then quickly chipped away, and we saw natural gas and oil prices fall. This gives us an indication that there is actually an upside because it lost about 40% of value. We can see that there's about a 40 to 50% upside just from that guidance alone with these increased prices that we can be able to factor in and take advantage of with these coldest months of winter approaching the United States and Canada, and then with the increased tensions between the United States and Russia, with Western Europe having to buy natural gas from the United States. Then I'm going to show you an Excel sheet that breaks down different ETFs that you can buy in the oil, natural gas, and then gasoline, and then finally a total oil and natural gas following ETF, so you guys can take advantage of the increased prices that we are going to most likely see with the United States and Russia tensions and the colder winter that we're going to be facing here in quarter one of 2022. Now we're going to go over the chart so you guys can kind of see what I'm talking about. Back during 2020, we saw a low of about $1.44 for each futures contract for natural gas. We saw this slowly increase over 2020 and into 2021, but we saw a peak out back in October of 2021 at $6.46. Why is that? We saw because the United States federal government released some guidance saying that year-over-year increase to your electric bill and heating bill would be about 40%. I looked at my current gas bill statement, and it was about 40 to 50% more from last year. It was absolutely insane. Really hurt my pocketbook being on a fixed income, but with everybody else, I can see the total hurt that everybody's feeling within the United States with these increased heating prices. So with that, we saw it reach up to $6.46, but then we saw it end up falling about 40% to get back to the lows that we saw back in December. Now, what does that tell us? The whole factoring in of that 40% increase from the federal government for natural gas prices was totally taken out. So it was factored in, taken out, and put back down to lows. We see that it is slowly increasing now at about $4.22 for the natural gas prices, and we could see a total return from now all the way up to previous highs of about 50%. But we don't want to be too greedy, so I'm thinking about a 40% increase because of the tensions between Russia and the United States, the increased heating bills that we're going to be experiencing here in the United States from the federal government's guidance, and then also with that Farmer's Almanac thing that I was telling you guys about, that they expect this to be a colder than average winter here in the United States. So with that, we could totally see, and it could be a very realistic movement to see up to a 40% increase in natural gas through quarter one here in 2022. The next thing that we're going to be looking at is crude oil futures. We saw a low of about $6.50 when the pandemic first began, and then we saw it rise up to about $85.41 as a high back in October, and then we saw it pull back into the end of November at about $61 or so, and now we are back at $81. There's a lot of factors here going on to this. A lot of people are taking tax loss harvesting, locking in their gains for the year, etc. But now we are seeing that it's going back up because there are reasons to believe that the oil prices will continue to rise with the Russia and the United States tensions. We also have overall consumption increasing in the United States and OPEC not pushing to produce more until February 2022. So we still have about 2 to 3 weeks of increasing in oil prices here moving forward. We also have to worry about another green energy bill that will be proposed, since the last one was turned down by the Senate. And the reason why we have to worry about this is that if a green bill does decide to get funded, that will be a good reason for crude oil to continue to increase. And even if it doesn't get voted in, that's another reason for crude oil to be increased. If a green energy bill does get passed, that will give us indication that crude oil will continue to go up because these fossil fuel companies want to take their money while they can. And then if it doesn't, we'll see that consumption will continue to rise and demand for oil will continue to rise as well. Now we're going to jump into the spreadsheet that I was telling you guys about before. I broke it down from oil, natural gas, gasoline, and then in oil and gas ETFs that you guys can buy. Now I'm going to give you a quick understanding of what an expense ratio is. Basically, with an ETF that follows these futures contracts, these expense ratios are the payment that you're making to these brokerage companies or to these management companies to manage the fund for you, take you in and out of the oil futures, etc., etc. So this expense ratio is based on a full year invested. So it's 0.79% of your total return. You're going to be charged for owning this ETF. So for oil, we have USO, UCO, and SCO. The reason why I have USO and UCO, we have the United States Oil Fund, which isn't leveraged. We have the UCO, which is the 2x leveraged fund provided by ProShares that follows the oil futures. And then we have SCO for you guys to be able to short if you want to short this on the down end when Russia and United States tensions go down, or if we see a different administration come in. This might be a good time to short oil and have oil prices continue to go lower if production increases. We have natural gas as well with UNG and Boyle and Gas. UNG is United States Natural Gas Fund. Then we have Boyle, which is ProShares again, and their gas fund. This is another 2x leveraged, so that means you're going to get 2 times the amount of money if it goes up, and then you also have 2 times the losses if it goes down. More of a risky play, more of a short-term hold, but you can invest in that if you're fully devoted into this play. We also have gas as well, which is another just nice and stable that follows the natural gas fund moving forward. Then we have the gasoline, which is UGA, which is United States Gasoline Fund. And then we have the oil and gas ETFs that you can invest in. We have DBE, which is not a leveraged one. It gives you some exposure into the light sweet crude, heating oil, brute crude oil, RBOB gasoline, and natural gas. So it's an overall of everything that we've been talking about here. And then we have the OILU and OILD, which is micro shares oil and gas exposure, which is a 3x leveraged ETF, with the first one that follows it on the way up, and then the other one that follows it on the way down. So the inverse, so you can make money as tensions lower or prices start to lower after the winter and the United States and Russia tensions kind of subside. I hope you guys enjoyed this video. Please remember to like, share, and subscribe so it can continue to grow this channel and be able to get this information out to other people. I hope you guys can take advantage of the energy sector here moving forward in quarter 2022 and be able to make some increased returns and see some of the best stock picks that you can be buying and investing right now for January 2022, February 2022, and March 2022 moving forward. If you guys enjoyed this video, and have a great day.